Hi, this is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Monday the 13th of November. Starting off with the S&P, which is making good ground with the breakout of this mid-move consolidation resting on the 50-day moving average around 43.30 above that, and we're looking for that resistance line projection from back in August last year as high as 45.80 as soon as the end of this month. Obviously, people still doubt that this market could turn around, but it's a bear trap island reversal with a double unfilled gap to the upside. Doesn't get much stronger than that, and therefore we are looking for 45.80 while we're above 43.30. Moving along to the stocks, which one would hope would have some helpful momentum from the situation at the S&P. Here we've got Amprius, which is having another go at turning around after multiple failures here. What is interesting is that even though we're still near the lows, the RSI has kicked up with decent bullish divergence, so looking for a turnaround here sooner rather than later. Probably if you're cautious, you would wait for an end-of-day close through the 50-day moving average at 3.85, but otherwise the close on Friday basically looks as though it's enough above the $3 mark and that resistance line from back in June to take the shares up and eventually move to as high as $5 by the end of this year. So above 3, looking for 5 on Amprius. Next one is one which I haven't looked at for a while, Blink Charging, and here another attempt at breaking a very extended bear run. The situation here is we've had an unfilled gap to the upside. We've also had an island reversal, so gapping down then gapping up, bear trap island reversal, one of the strongest setups around, and that suggests that we're going to be heading towards that line of resistance there, the top of the triangle there near $3.80 by the end of this month or even sooner, and that's valid while we hold above the recent resistance at $2.80, above 280, looking for 380 on Blink Charging. Moving on to another stock which may have some chance of recovery. Obviously rather an interesting chart that we've had so far for a collective audience, but what the key here obviously is that after the bear trap rebound on Friday, we can at least head back up towards the old support for this market back at the beginning of the month around $4.50. So the view here is above the low of Thursday, $2.26, looking for up to $4.50 on collective audience. Next up is another prospect for the top, hopefully. Here we've got Cibus, which had a new rather painful leg to the downside at the end of last month. Current situation is that we are in a potential triangle base, and the top of that base is around $21.50. Looking for that to be delivered the longer we're above the resistance of midweek last week around $14, so above $14, looking for $21.50. Ideally, we stay on the right side of $13, which was the peak on Thursday in the meantime. Moving on to another stock which may have some bullish credentials. You can see that we've had a decent unfilled gap to the upside there for Doximity, and the view now is that we could hopefully it's an island reversal. It's a bear trap island reversal because obviously we gapped down massively in August. So looking for the shares to at least deliver an intermediate rally here, probably up towards the line of resistance I've just drawn there at $28. Hopefully we could see that by the end of this month within a rising trend channel base which I've drawn from back in August. The ideal scenario there is that we stay above the resistance before we broke out around $22.80, so above that, looking for $28 on Doximity. Next situation coming up, and we can see Direct Digital is and has gapped up. We already had that break of the resistance line there from basically a triangle break back in the latter part of September. We've got a rising 50-day line since then, and the view now is that while we're above the old May resistance on the way down, $3.55, we're looking for the next level up here, up to $4.80 by the end of this month. So a nice turnaround for that. Moving along to Fitell Corporation, and here beautiful U-shaped turnaround, which gives us an excuse to look for further gains on this situation. $3.40, which is a resistance line projection there from August, and we're looking for that within a broadening triangle base, hopefully well before the end of this month. New name coming up now, and here you can see that Medavail is still trying to turn itself around. The plus point, if there is a plus point after such a painful decline, is the way that the RSI is now very, very oversold around the 20 level. But probably the view now is that we really want to see the shares back above the intraday high of Friday, which was around $4.19 on an end of day close basis, before assuming that a turnaround will be forthcoming. You can see that the shares have had difficulty breaking previous intraday highs over the recent past. Microalgo has become a friend in the market, given the strong performance that we've seen over the recent past. The situation here is that we're looking at a rising trend channel base, and shares keep bouncing off the floor of that channel. One can argue exactly where that is, but it looks as though it's around $2.70, and above that we're looking for the shares to at least head to the top of the recent range, around $3.90 by the end of this week, perhaps even sooner. On to the last few. First one is one which we are revisiting, and here you'll see NVNI Group trying to turn around still. Probably the name of the game here is for the shares to get back above $2.40, which was the initial November resistance. If they can do that, we're looking for a return to the $3 plus area by the end of this month. Nice bullish divergence in here as well, so lower lows, but the RSI creeping up quite nicely, and that could be a signal that we are ready to turn around. Next one is Syntec Optics, and here you can see another situation where a stock is trying to struggle to turn around. The intraday peak on Thursday, $4.66. Above that, we're looking for the shares to fill the gap up to as high as $7.80 by the end of this month. But clearly, the volatility there not for widows and orphans. On to the next situation, which is Telos, and here beautiful turnaround with the recent break of that resistance line there from back in May. The breakout point, I suppose, around the $2.50 level, and now we are looking to see how high the stock could go. Favored destination at this point is up to as high as $5.40 by the end of this month, at a resistance line projection from back in March. Ideally, the shares stay on the right side of $3.30, which was the old resistance at the turn of the month, May to June. Finishing off with a stock which I don't think we've looked at before, but it looks like a great prospect. Bear Trap Island reversal with the gap down, then new lows, and then gapping up again. That U-shaped turnaround that we've got as well is bodes well for a potential move up towards the $8.40 area by the end of this month, within a broadening triangle base that we've had in place since back in May. Ideally, we stay on the right side of $6.30, which was the resistance on the way down, the main resistance on the way down on an end of day close basis. That's it for me today. More updates tomorrow.